Hi everybody, welcome to another update on the stock screener. Today we're going to talk about Reklaim, which is a very interesting stock. So it has actually gone down a lot because it was loss making, but now you can see that it has shot up very fast, a double, even a triple from the bottom. So something is happening with this company. 7 days ago, they had the Q2 earnings. We will look at that later on. But let's look at this news release from today. They said that they reduced payables by $500,000. So take that into account because that means that the balance sheet has improved by $500,000 from Q2. So what does this company do? It's just an app that you can download. You can register yourself and just sell your private data. You get money for that. Per week, it's about 20 points, I think. That's about $0.2 that you get, I think. So in a year, you will get about $20. It's not a lot, but it's free money by selling your data. So you can just download the app and then redeem your points for free. But let's look at the company itself. So it has 80% gross margins, a very high margin company. I like that. They said that this will go to 90%, even better. It is a profitable company right now. I don't buy companies that lose money. It's rising in revenue. That's good. So we need to monitor that this keeps rising. Costs coming down, also important. This is important because they have halved the costs since this year. So that's important to know that they have halved the cost since this year. And that's also why the company is now rising again. So lower costs, higher revenue, lower costs, and now they are profitable. Margins increasing since this year. Look at these margins going to 80, 90% now. Net income positive. I like this turnaround story. Let's see, debt reduction. Yes, they do have some debt, about 1.5 million net debt that they will need to pay off. But since they are net income positive and growing, then I'm sure that they will be able to pay that off. Very simple company with growth. I'm sure that a lot of people will start downloading this app and reclaim their personal data. So let's look at the balance sheet. Okay, it has deficits because they have quite a lot of debt that they need to repay, but they do have some current assets. So it's only 1.5 million debt minus the 1. So that's 2.5 minus 1 is 1.5 million net debt because they deleted 500,000 from this from the news release today. So yep, just a bit of debt, and then you can see here the revenue is growing. It was 700,000 last quarter, now it's 1 million, so it's growing. Important is this is the second quarter. They said that there is seasonality. So first quarter is the lowest and then it grows to the fourth quarter. Fourth quarter is the highest revenue. So we are going to see revenues keep on rising in the coming quarters and up until Q4. And of course, more growth to come later on, hopefully. Here, the costs have gone down from 500 to 200, so that increases the gross profit margin, which is very high. Okay, we do have some fixed costs here, but they are lower than the gross margin, gross profit. So we do have some net income, about 1 million per year. Now let's do some projections. So currently we are here, June. The equity is negative, but the earnings are positive, 255,000. And you can see here, this is the revenue, it's rising. So I have projected it higher for the coming years. Gross profit, you can see that the gross profit was not that great, but the margins improved drastically this year. So that means it has turned into a very profitable company right now. Also, the net earnings have now gone positive, so no dilution anymore. If this trend can keep going on like this, then net income should also start rising like this. Okay, and that means that the equity will rise, and by next year we should have around 3 million in equity. And you can see that here, 3 million net income for next year. So the enterprise value currently is at 17 million, which has the warrants and options added to this, plus the debt, 1.5 million debt. But you can see the growth here. If we keep growing like this trend here, then I think this is a very good buy. You get your money back at a 10% discount rate, maybe in 3 years, 4 years, and then there is still plenty of growth. This is a tech company. This is not a gold mine where you need to replenish your resources. This is going to keep on giving money in the coming years. It's just a tech company with 90% gross margins. So at some point we will reach the enterprise value, and then a lot of upside will start coming in. So the earnings will be 3 million, 6 million, 10 million at this growth rate. And looking at the enterprise value, it's only 17 million. So PE of around 3, and then PE of 2. Next year, PE of 5. Can you find a tech company with a PE of 5? I don't think so. 5, 3, 2, and then PE of 1. So this is a very cheap tech company. I'm glad that I found it. And I just bought a tiny bit of it. I think this has upside. So that was the small video about Reklaim, the privacy company. And I'll see you in the next video. Bye.